good, dude. Oh, how'd you like those Ides of March? Look at this. Look at this, kid. Is this what you expected? I honestly can't say that I expected it, because literally when I recorded the White Knuckle Report last week, this weekly candle right here, this thing didn't go bullish yet. It was all the way down here hanging out on the trend line, but then it just shot up right on schedule to have this bullish hammer closing. And of course, it's bouncing off the trend line, and then what? You get follow through the 200-week moving average. Potentially going to close the weekly candle above the 200-week moving average, kid. Obviously, very significant. And then now we're starting to look at the Fibonacci here, and we're coming up against the 236. It's like, okay, what's next here? We're going to stall out at the 236? That might make some sense, because here's what's interesting. Bitcoin is showing relative strength against other markets, against the S&P 500, that's for sure. Let's look at the S&P 500. Look at this. So this is interesting. S&P 500 closing below that trend line, but very bullish volume on a green candle, but not exactly a bullish green candle. But the point here is that crypto is showing relative strength. What else is showing relative strength over the S&P 500? It's the NASDAQ. Look at the freaking NASDAQ, kid. Look at this. This thing still hasn't closed a single weekly candle below the trend line. And now it just closed a weekly candle above this upper channel trend line. So, what does that look like to you? Kind of looks like a bull flag. Okay, one more sector to kind of corroborate. The semiconductors here, kid. So I haven't really talked about the semiconductors here, but as you probably know, a lot of crypto miners rely on semiconductors. So there's a lot of demand for semiconductors if crypto miners are active. And if the price of crypto is going up, then of course crypto miners are going to be active, and semiconductors could have a surge in demand. So the fact that semiconductors, NASDAQ, and crypto are all very strong right now, that's signaling something here. And it's no surprise that it could be signaling potentially a large transition of capital from the traditional finance sector, because that's what this is. This is the XLF. This is the banking sector, right? This is the ETF that represents the entire banking sector. When have you ever seen the markets break away from each other like this, where the financial sector is literally tanking, like 2 weekly candles just absolutely blood red, and now you've closed a bearish weekly candle below the 200-week moving average in the financial sector, while cryptocurrency is literally bullish? Like, it's pretty obvious what the relationship is there, right? It's like distrust in the finance system, and that's sending capital over to other alternatives. And it's not just crypto, right? Obviously, crypto very, very bullish as the financial sector is tanking, but also look at gold. Gold, dude. Like, we rarely see gold and crypto moving in the same direction. In fact, it's like never happened really in the history of crypto, right? So gold has really been strong since October. This is that October low in gold. And now it looks like this whole move here was just the start of potentially a major breakout in gold. So for the same reason that crypto is pumping, gold is pumping, and for the same reason that gold and crypto are pumping, the financial sector is falling. That is a transition of capital from the traditional finance system to the other alternatives, which up until 2009, it was really only gold. Gold was your only other option. And now crypto and gold are representing that flight to safety out of the traditional finance system. So that brings me to the DXY. Look at the DXY here. Look at this. Bearish, right? You still haven't closed a candle above the candle that was 4 weeks ago, right? You attempted to, you couldn't close, and now you're starting to get more follow through on the downside. So not only is the flight to safety out of banks, it's also out of the US dollar. So it's like, okay, where is the capital flowing out of the US dollar? Well, it's definitely not flowing into the traditional banking sector. That's crystal clear, right? It kind of looks like it's flowing into crypto. It's definitely flowing into the NASDAQ. That's for sure. And I've talked about this, right? Like the NASDAQ and cryptocurrencies are really intertwined at this point, right? Because it's not just, crypto and finance now. It's financial technology. Financial technology is, first of all, it's relying on semiconductors. So that's like, hardware for cryptocurrency. That's extremely relevant. And a lot of the NASDAQ, think about it, like Microsoft, Apple, these companies rely on semiconductors. So you have this whole confluence of technology and finance gaining a lot of strength at the time that the traditional banking sector is coming under major pressure. It makes a lot of sense, but it is surprising because you really don't see like such a deviation across the broader markets where you have a lot of strength in one sector and a lot of weakness in another sector. That just doesn't happen. But that's what we're seeing. Like, welcome to the spring equinox. Welcome to the future. Here come the paradigm shifts, right? Because now, what do we have to talk about here? We got to talk about what Jerome Powell is going to do this week on Tuesday. He's going to have to address this situation, right? This banking situation, right? It's like, okay, what's he going to do? Is he going to stay hawkish? Maybe. But the thing is, he knew that this was going to start to happen. Jerome Powell specifically said, we're going to break things. If things break, we can fix them. So the question is, are things broken enough for him to now shift course and start fixing things? I'm not totally sure. I think they might want to cause more damage. But here's the problem. They're trying to cause a controlled forest fire when the Santa Ana winds are blowing. You see what I'm saying? So they're trying to limit the damage to regional banks and stuff. But they're not going to be able to do that because now people are realizing well, I don't trust the banking system in general. And I have this alternative, which is cryptocurrency, also gold and silver. We have all these different alternatives. So the Federal Reserve and also Janet Yellen, she spoke this week too, trying to imply that everyone's going to be scared out of regional banks and go to central banks, or basically, like JP Morgan and these bigger banks. It's like, no, they're not going to be scared out of regional banks into bigger banks. They're going to be scared out of banks in general, and they're going to put their money in cryptocurrency in a hardware wallet where it's safe and no one can touch it, right? That's the only place that's safe at this point. So if the goal of the Federal Reserve in their effort to break things and scare people out of regional banks is to scare people into larger centralized banks, I think that's kind of stupid, and I don't think that's going to work because there's too many other alternatives, and maybe that's why they've really been trying to scare people out of cryptocurrency. And, obviously the tinfoil hat narrative is that the whole FTX thing was kind of laying the groundwork for this very event, right? They're going to make everyone scared of crypto by destroying a crypto exchange, and then when the banks start to collapse, people aren't going to go to crypto because crypto's scary. But guess what? That's not working, right? People see through this FTX thing, right? Everyone knew that FTX was literally a government operation. It was okay, yeah, we created this exchange. We used this fall guy, Sam Bankman-Fried, and we're going to make it look like crypto is the least safe place of all time. But it was so transparent. Everybody saw through it. And so the efforts to herd the masses out of the alternative financial system into the traditional financial system are a complete failure because people understand that you don't need a crypto exchange to protect your crypto. The thing that happened with FTX was not indicative of crypto. It was just indicative of centralized exchanges and the problems that they're going to face in a financial system that is specifically not centralized. So of course, things like FTX are vulnerable. Every cryptocurrency person understands this. So they're once again relying on us to be stupid. Powell and Yellen and literally all the bureaucrats in Washington are relying on us to be stupid and not understand that there is a way to hold cryptocurrency that's safe, that is not using centralized exchanges. And that's sure what the price is reflecting. The price to me is reflecting people know how to use cryptocurrency safely. They're seeing it as a safe haven when the traditional banking system is collapsing, right? So another point I'll make here is that with these bank runs, right? And I think there's probably going to be more bank runs because like I was just saying about Powell, if Powell is going to, keep raising rates, and maybe he's going to raise them a little bit more, maybe he's going to signal that they're going to start lowering rates soon. The point is, the interest raising thing is it has lagging effects, right? So now those lagging effects are going to hit. It's like a tidal wave, right? That tidal wave just started hitting. We just started seeing banks collapsing. Like, it's still early on in the tidal wave collapsing. The point is that as the tidal wave crashes down here and traditional banks are getting squeezed, right? The value of their bonds are going down because interest rates are going up. That's just the way that it works. There will be more bank runs. Now, the thing is, when there are bank runs, banks are forced to liquidate assets. That's exactly what happened to Silicon Valley Bank. What assets are these banks holding? A lot of them are holding bonds, right? And considering bonds go down in spot price value as interest rates go up, a lot of banks who are collateralized with bonds are now losing a lot of their liquidity, right? So remember, the banks aren't holding crypto, right? That's not what banks are holding. That's not what they're collateralized against. So when these banks are forced to liquidate assets, they're liquidating their bonds. They're not liquidating cryptocurrency. You see what I'm saying? So in this weird situation with bank runs and, like a crisis looming, generally speaking, everything falls in price together because everybody is forced to liquidate everything, right? But considering that traditional finance banks and the traditional finance system in general isn't very collateralized in cryptocurrency, cryptocurrency is to an extent immune from the whole liquidation process thing, right? And that's not just reflected in the price of cryptocurrency. That's also reflected in the NASDAQ because, as I've said many times, the NASDAQ and crypto are very much intertwined. It's also reflected in the semiconductors. So people understand that crypto isn't about to be liquidated just because all of these bank runs, right? Crypto is not vulnerable to, like a mass washout in this situation because these traditional finance systems aren't holding cryptocurrencies. So investors are now seeing that. I mean, investors are smart. The market is smart. Don't forget that. The market is smart. People understand where to put their money if there is a safe place to put it. And that's why gold and silver have, done really well in these sort of like crisis recessionary environments. The jury has been out on whether or not Bitcoin was going to be one of those safe haven asset classes, because obviously we've been told that it's a risk on asset class. It's risk on, right? But it's like, okay, that's not what we're seeing right now. That's not what the price action is reflecting right now. It's reflecting that crypto is, of course, a safe haven because it's an alternative to the traditional finance system. And if we are also going to continue to see the devaluation of the US dollar, which we're probably going to, then of course any alternative decentralized currency is going to make the most sense in that situation. And why are we going to see continued devaluation of the dollar? Well, because the government is literally bailing out all the individuals who would have otherwise lost everything as these banks are collapsing. The government isn't bailing out the banks, but they are bailing out the individuals to the tune of literally hundreds of billions of dollars. So welcome to the situation where they're printing money again, literally firing up the money printers. Also, I'm sure you've seen around the internet that the Fed is adding to their balance sheet now. They're not taking away from their balance sheet as they've been saying that they've been doing, for the past literally 12 months. They've been saying, yeah, we're reducing our balance sheet. No, not anymore. Now they're adding to their balance sheet. They're buying things and they're printing money to buy things. So that means that more pressure is to come here on the US dollar. So wow, lots of things going on right now, all of them very, very favorable to the alternative financial systems, aka cryptocurrency, but also gold and silver. It's right up in there. When you see gold, silver, and crypto moving together, this is silver, this is gold. When these are moving together, it's like, dude, this is not a coincidence, right? This is not a coincidence that your paradigm shifting move here, where it's not a risk on move per se. It's just like everything that isn't traditional finance is moving to the upside. Like, that tells you something. Okay, so let's get back to Powell really quickly. What is Powell going to do on Tuesday? Well, I don't know, but what I will point out, if he starts lowering rates, or let's say he goes flat, I don't think that's going to happen, but let's say he doesn't raise at all, that is a sign that literally calamity is afoot, right? Because it's important to realize that one of the reasons why interest rates come down before the market starts to come down, like before the market crashes, like in 2008, like in 2001, it's literally because by the time the nightmares show up, by the time the calamity shows up, the Fed can't lower rates fast enough. And that's because of the lagging effect of rates, right? This whole idea where it's like they've been raising rates for a month. Well, here come all the bad things. And then as those bad things show up, it's like, okay, well, we got to reverse course. But you can't reverse course fast enough. Like the crash is coming. It's coming no matter what. We can already see there's going to be some kind of major crash. Like with this banking stuff, this is just the beginning of the banking stuff. You better believe it's going to get worse. It's going to spread beyond the regional banks. I mean, that's my opinion. And that opinion is based on the fact that there is clearly a flight into cryptos. So yeah, more pressure is going to come down on the bank. There's going to be more bank runs, right? But as those bank runs continue to happen, it's not crypto that's going to get liquidated. It's going to be government bonds that are liquidated. So it's like, yo, do you see all these like dominoes just like falling? It's like, wow, kids. So yeah, I mean, here we go. All you got to know is that this week, if Powell comes out dovish and he starts doing the pivot dance, it's like, okay, get ready, it's about to get nuts. But if he stays, hawkish, he says we're raising 25 basis points, we're going to stay the course, we're not done, we're going to continue to raise rates, then you better believe that he's trying to destroy more regional banks, right? He's trying to destroy these smaller banks to basically herd the masses into the larger centralized banks. But that's just a complete failure because that's not what's going on. You can see that clearly reflected in the price action. Look at Bitcoin's weekly candle compared to the financial sector weekly candle here. I mean, 2 weekly candles on this thing. It's pretty obvious where the masses are going. And once again, don't underestimate the intelligence of the masses. That is the classic mistake that governments have been making for centuries. That's just what it is. They think we're stupid. They think they can scare us into doing things. And sometimes they do. Sometimes it works. But it's not working here. It's definitely not working here. The price is telling you what's going on. There's a flight out of traditional finance. I mean, this XLF represents JP Morgan, Goldman Sachs, Wells Fargo. These banks are all in this. Nobody is immune. The banks are not immune. Bank runs will continue as long as the Fed is devaluing bonds. And that's what they're doing by raising interest rates. Just the nature, that's the inverse relationships of bonds. The higher the interest rates go, the lower the spot price on bonds is. So if a bank is collateralized by bonds, their collateral is losing value. Customers of the bank are smart enough to understand that this is going on, and this is what causes bank runs in this specific situation. It's not always this way, but in this specific situation, that's exactly what has happened to the banks that have had these major bank runs recently. It's a result of people just understanding that the assets that the bank is collateralized in are losing value and people want to get their money out, right? It's basic stuff. So that's all I got for you. Like, here we go. Spring equinox idiocy. It's about to get rowdy out here. And there's a lot of money to be made, I'll tell you. A lot of money to be made. Congratulations to everybody who's been white-knuckling crypto this whole time, because now you look like a freaking genius. And it's probably just getting started. Honestly, it is, because it's getting backed up by the NASDAQ. Like, this is all happening together. Look at this NASDAQ thing. Like, this to me looks like there might be some more upside. Now, I will say that, we have more upside. There's still going to be more like bank collapse pressure and stuff. And these institutions are looking to liquidate assets to, pay off their clients. Definitely selling pressure will return to the market. That's for sure. The question is, where will that selling pressure take place? People are going to be discerning about, okay, I got to sell something, but I definitely don't want to sell these things, right? What are the things that people don't want to sell in this situation? Obviously, at this point, gold, silver, Bitcoin, the NASDAQ is showing something else here too, where, maybe a lot of the companies that are making up the NASDAQ, maybe they're holding a lot of crypto too. So their value is going up, like the value of their balance sheet is going up. But the point I'm saying is there will be more pressure to the downside as this crisis continues, no doubt about it. But the point is, we're looking for that relative strength, and the relative strength has already emerged in crypto. It's already emerged in gold and silver, and I guess it's just reflected in the NASDAQ too for whatever reason. That's kind of another mystery that's going to reveal its secrets over time here. But the point is that the fact that the NASDAQ is still strong, and it's specifically stronger than the Dow Jones. Look at the Dow Jones here. That's not particularly strong. Maybe it's just a back test of the trend line, but it's not nearly as strong as the NASDAQ. And then the S&P is now closing below the trend line. It's like, not every sector is safe. In fact, the broader markets are starting to deviate from one another, which maybe that will change this week. But right now, that's what we're seeing, and that's very, very interesting. So it's going to be a really interesting week. The Powell speech on Tuesday, it's going to be huge. The markets are going to react insanely to that. And I would speculate they're probably going to react to the upside in the short term. And then, maybe another bank will collapse and then everything gets pulled back down. And then that would be a major buying opportunity. But we'll see. It's really interesting here. Once again, I got to always congratulate the white knucklers because, once again, you guys are doing the right things. Like, you're doing the right thing by just staying convicted in your crypto holdings because you know the prophecy, and the prophecy looks like it's about to be fulfilled here in this next financial crisis that is looming. So,
it's not wishful thinking. Deliberate action that will deliver you all the way.